Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we'll be taking a quick look across markets, talking about what themes are in play at the moment, what could be affecting sentiment this week, how things could be moving. So let's jump right into the charts because we're seeing some very interesting moves happening. So last Friday, of course, let me show you on the calendar actually, which I need to load up real quick. Last Friday, we had the US jobs data, which was significantly stronger than expected. Let's just quickly recap those numbers. 517 jobs added, way above the expected 193K, positive revisions to the prior, an unexpected drop to a 53-year low in the unemployment rate. Average hourly earnings, the month over month was in line with expectations, but there was a positive revision, and then there was also an upside surprise on the year over year. It was just super strong across the board. And then the ISM Services PMI, look at that, 55.2, up from 49.6 the month earlier. So just bumper economic numbers there. And as a result, we're seeing the dollar rallying and other pairs, as you would expect, like euro dollar dropping, dollar yen rallying, cable falling, all as markets start to up their expectations for Fed tightening. Because if the US economy is this strong, the labor market is this hot, then this, from what we've seen in the inflation data so far, it's been good. It's been a rapid drop from the highs that we had last summer. But how long can this drop go on for? If the labour market and the economy is still doing so well, is it going to be possible to get inflation to fall under 4 or 3%? Getting it back to 4 or 3% is probably going to be quite easy, but under, we're going to have to wait and see. Maybe a bit more Fed tightening is going to be needed. You can see here the probability for a 25 basis point rate hike, so 4.75 to 5%. At the March meeting is pretty much 100% expected. No one really expects a 50 basis point rate hike. But this is where things are interesting. Before, markets were expecting pretty much a pause. That was the base case. Now, it does still seem to be... no, sorry, look. I get it wrong, actually. Markets now expecting another 25 basis points rate hike in May, as the base case, rather than 1 week ago where the base case expectation was for a pause. So we're shifting in favor of expecting more tightening, basically, which is why we're seeing these moves across markets. And if I just go back to the Dixie, well, actually, let's start with dollar yen, because dollar yen, I think, is the most technically interesting one. We were in this downtrend. Where's the line? There it is. And look at this, we've had this definitive upside break, testing the 50-day moving average now, having broken above the 21-day moving average substantially for the first time since last November. And the door is open for further upside. I'd be looking at this area, 134.80, sort of around 135 as an area which you could be targeting. But, if market's going to continue to price in more Fed tightening, then, there's room for this dollar correction higher to continue and perhaps a test of the 200-day moving average. But, we're going to have to see. The uptrend in some of these other pairs is still maybe just about alive, like the uptrend in euro dollar, still maybe just about alive. But we're below this 21-day moving average now. Could soon be testing the 50-day moving average here, and that uptrend, a drop towards this 105 area is possible. Let's quickly look at stocks and a few other asset classes. Stocks, despite this big move, in fact, let me just show you yields. You can see here that US government bond yields I've got along the top here. They've all jumped in tandem with the US dollar. But despite the moves in the dollar strength and the move higher in yields, stocks doing pretty well. And it's because this strong economic data is boosting the idea that the US economy might be able to avoid a recession, which is for now balancing out pessimism about higher interest rates from the Fed. Whether this can continue to support stocks above 4,100, we're going to have to wait and see. We do have more earnings out this week. That'll be key as well. But for now, stocks continuing to grind higher, remaining close to recent highs. Commodities, gold, as you would expect, being absolutely battered at the moment. Well, it has been battered in the last couple of days because of the strong dollar. So just looking for the dollar to settle really, to see what could happen to gold, but certainly looks like it's at risk of further downside. Perhaps a test of its 50-day moving average in the 1850 area. And then oil, also weighed upon by the strong dollar. Although if the US economic outlook's looking better than expected, then, you know, maybe the dollar, oil, can come back a little bit, because oil is very much more focused, less on financial conditions and more on expectations about economic growth. So if the US is going to avoid a recession, you know, maybe we can climb back and get back into the upper 70s and the low 80s again. What was the final asset class? Oh no, that's pretty much it from the charts that I wanted to run through. But yeah, in terms of what we've got ahead this week, Fed Chair Powell speaking on Tuesday. Now, obviously, we just heard from Powell last week after the Fed meeting, so probably looking for a reiteration of pretty much all of those themes he was talking about. But having had a bit of time to see the market's dovish reaction to his previous remarks, maybe he wants to switch up his message a little bit. Maybe he'll want to come across a little bit more hawkish. I don't know. We're going to have to wait and see. But then, you know, we've got a smattering of other Fed speakers as well throughout the week who, as always, we'll be listening to, like Williams and Waller on Wednesday. For the sterling traders, well, actually, in the G10, there's quite a lot to be thinking about. Like, you've got the RBA on Tuesday. You've got Bank of England monetary policy policymakers speaking in Parliament at their monetary policy report hearings. You got UK GDP as well. You got Canadian jobs data. Out of the US, though, you know, apart from Fed speak, it's pretty quiet. Preliminary University of Michigan consumer sentiment data, though, for February, on Friday will be interesting, though, because of, you know, most people like this inflation expectations component, which has been easing in the last couple of months. And, you know, we'd want to see that continuing to ease. But yeah, guys, that's pretty much the video. Hope you all enjoyed it. I hope you all found it informative, and I'll see you all in the next one.